Bitcoin is currently testing a critical support level, the 200-week SMA, a threshold that has historically marked significant rebounds. Today, we delve into what this means for the future of cryptocurrency investment. Looking ahead, the immediate future for Bitcoin hinges on its ability to hold above the 200-week simple moving average, SMA. This critical technical indicator has historically served as a vital support level for the cryptocurrency. In previous market cycles, Bitcoin's ability to maintain this support has often preceded significant price rebounds. If Bitcoin can sustain this key level, historical trends suggest a strong possibility of a rebound, potentially leading to a test of the $65,000 mark within weeks. This bullish outlook is further supported by increasing activity in options trading, indicating a growing conviction among long-term investors who believe in Bitcoin's resilience. Additionally, a recovery in altcoins like Solana and XRP is anticipated, as these assets may demonstrate relative strength and could benefit from cautious investments in exchange-traded funds, ETFs. Institutional interest in Bitcoin remains robust, as evidenced by substantial purchases from notable firms. Cathie Wood's recent $25.5 million investment in Coinbase and SpaceX highlights this trend, along with BlackRock-backed Securitize's plans for a $400 million debut on the New York Stock Exchange. However, should Bitcoin fall below the $58,000 mark, the risk of further declines increases significantly. This concern is compounded by ongoing ETF outflows and hawkish signals from the Federal Reserve, which may dampen investor sentiment and increase market volatility. The implications of Bitcoin's price movements extend beyond individual investors, impacting the broader cryptocurrency market and potentially influencing regulatory discussions. As Bitcoin hovers around this pivotal level, investors should closely monitor the 200-week SMA. This support level is poised to be the decisive factor in determining the trajectory of Bitcoin and the wider cryptocurrency market. In the coming days, Bitcoin's ability to sustain its support will either signal a new accumulation phase or plunge the market into deeper corrections, reshaping the landscape for cryptocurrencies. The current downturn in Bitcoin's price can be traced back to several macroeconomic pressures that have emerged over the past few months. The cryptocurrency market has faced significant challenges, primarily stemming from rising inflation and shifting monetary policies. ETF outflows and increasing bets on interest rate hikes have placed downward pressure on Bitcoin, pushing it below key resistance levels. The latest PCE inflation data, which hit its highest mark since early 2023, has sparked fears of tighter monetary policies from the Federal Reserve, creating uncertainty among investors. This has led to a broader sell-off in technology stocks, which are often correlated with cryptocurrencies, further exacerbating Bitcoin's volatility. Geopolitical uncertainties, particularly concerning Iran, have also contributed to an unstable market environment. Investors are wary of how international tensions can impact global economies, leading to increased caution in riskier asset classes like cryptocurrencies. A minor panic surrounding a Zcash incident on the Orchid suite briefly triggered a market-wide sell-off, although it should not have influenced Bitcoin heavily. Despite these challenges, a notable trend is the resilience of long-term holders. They continue to accumulate Bitcoin, remaining undeterred by recent price declines. This group of investors, often referred to as hodlers, demonstrates a belief in Bitcoin's long-term viability, emphasizing confidence even amid market turbulence. As the cryptocurrency landscape evolves, the outlook remains uncertain. However, the sustained interest from long-term holders could signal a potential recovery as market conditions stabilize. Analysts suggest that if inflationary pressures subside and the Federal Reserve adjusts its policies accordingly, Bitcoin may find its footing once again. With the emergence of new regulatory frameworks, the cryptocurrency market may experience renewed legitimacy, paving the way for growth in the coming months. The significance of Bitcoin's current positioning cannot be overstated. As of now, Bitcoin is hovering around a critical technical level known as the 200-week simple moving average, SMA, which ranges from $58,500 to $59,000. Historically, This range has acted as a reliable support zone for Bitcoin, often indicating potential bottoming phases whenever the price approaches it. In previous cycles, this technical indicator has been pivotal, marking the beginnings of bullish trends after prolonged downturns. Currently, long-term holders possess over 16.5 million BTC, the highest volume ever recorded, and they are exhibiting remarkable resilience by not selling, despite facing recent losses. This behavior underscores a strong conviction among investors regarding Bitcoin's future potential. The current scenario suggests that many investors believe in Bitcoin's ability to recover and thrive in the long run. Furthermore, modeling predicts an 81% probability of Bitcoin breaking above $65,000 in the near future. Such a breakthrough would not only signify a crucial psychological victory for the cryptocurrency, but also act as a catalyst for renewed interest from both institutional and retail investors. This would be particularly significant considering the increasing mainstream adoption of cryptocurrencies by financial institutions and corporations, which reflects a growing acceptance of digital assets in traditional finance. For average investors, this moment represents a pivotal opportunity for accumulation. The potential for a price rebound could signify increased wealth generation for those who invest at this crucial juncture. However, the risks are equally pronounced. Should Bitcoin fail to maintain its position above the 200-week SMA, it could lead to deeper corrections in the market, impacting not only Bitcoin but also the broader cryptocurrency ecosystem. A failure to hold this support level might trigger panic selling among weaker hands, exacerbating downward pressure on prices. This could create a ripple effect, leading to diminished confidence in cryptocurrencies overall. Looking ahead, the outcome of Bitcoin's battle at this critical technical juncture will likely shape market sentiment for the foreseeable future. Investors will be closely monitoring price movements, as a sustained rally could pave the way for a new bull market. Conversely, a breakdown could usher in a period of heightened volatility and uncertainty, making the next few weeks crucial for Bitcoin's trajectory. On June 28, 2026, Bitcoin experienced a significant price drop of 5.3%, bringing its value down to $60,345. This decline was marked by a brief test of the critical psychological support level of $58,800 before the cryptocurrency managed to recover slightly. This downturn coincided with a notable rotation on Wall Street, where investors shifted their focus from the semiconductor sector into a broader equity market. Interestingly, during this same period, the equal-weight S&P 500 index reached an all-time high, underscoring a robust performance in traditional equities. Despite this bullish trend in conventional markets, cryptocurrency assets, particularly Bitcoin, failed to attract any capital inflows, revealing a stark disconnect between the two asset classes. The bearish sentiment was further exacerbated by sharp declines in other cryptocurrencies, with altcoins such as Dogecoin and Hype suffering losses of 9.6% and 9.9% respectively. This widespread downturn in the crypto market raises significant concerns about investor confidence and overall market stability. Compounding these worries is the fact that Bitcoin is approaching the 200-week simple moving average, a pivotal technical indicator that has historically marked the bottom of significant price corrections in the past decade. This convergence of price action and technical levels creates a precarious situation for many investors who are now left to grapple with the implications of these developments. Analysts suggest that if Bitcoin cannot maintain above the $58,800 threshold, it could trigger further selling pressure, leading to a more extended downturn. Such a scenario would not only impact Bitcoin, but could also have a cascading effect on the broader cryptocurrency market, undermining the already fragile investor sentiment. The potential for a rebound remains, but it hinges on the cryptocurrency's ability to stabilize above crucial support levels. Looking ahead, market participants will closely monitor Bitcoin's performance in the coming weeks. The dynamics between traditional equities and cryptocurrencies will be critical to watch. Should Bitcoin manage to hold its ground and attract renewed interest, it could signal a potential turning point for the market. Investors will be particularly focused on how Bitcoin navigates this critical juncture in the evolving financial landscape. As Bitcoin stands at a crucial support level, will it bounce back towards $65,000 or will it face deeper corrections? Share your predictions in the comments below and subscribe for daily deep dives.